Good morning, everybody. This is Todd Mitchell for Tuesday, November 11th, and let's talk about the two Forex currency pairs that I was walking you through yesterday. The first one I want to go through here is the US dollar, Canadian dollar, right? Top chart is the daily chart, bottom chart is a 240-minute chart. Those are the two time frames that I really like. And the first one, again, the Canadian dollar, US dollar. I was talking to you yesterday right in here. Okay, right in here, as the market was pulling back and touching that gray action zone, which is a big support level in my eyes when the trend is up, and of course, the trend was up. So on a 240-minute chart, this was the opportune time to get long that market. And as you see, again, this is a 4-hour chart, so we got a move up, a little consolidation, but we moved higher with a higher high, higher low, higher high, higher low, and now we're just coming down a little bit. But we got that pop we were looking for, and so this was a nice correlation with what the daily chart was telling us, right? The daily chart, of course, has been up for quite a while. We hit the high back in beginning of November, and what we've been doing on the daily chart is we have been making, well, we basically have made a series of two lower highs and lower lows, and yesterday's low, right, corresponds, right, this low here corresponds with this low here. So the low of yesterday on a daily hit that blue action zone, whereas on the 240-minute, we were into the gray action zone. So you had beautiful confluence there. The daily and the 240 lined up beautifully, okay? And so that's why we got this pop in here. Let's take a look at exactly how big that move was. All right, we see about a 70 pip move to the upside here. Let's take a look at the other one that we looked at, and that's the US dollar Swiss franc chart. Pretty much did the same thing, right? It set up, but it wasn't as nice of a setup as the Canadian dollar, simply because on this pullback right in here on a 240, we didn't quite pull back as deep as the Canadian dollar, right? The Canadian dollar actually touched that gray action zone and then rallied. But either market was good. I just chose the Canadian dollar. I thought that was a little better play since we had that deeper pullback. Both of them, though, made a pretty nice move to the upside. Now, you know, whenever you buy any market on a pullback, the first level I always look at as that first profit target is the halfway back to the highest high. So let's just go through that real quick. This was the highest high at the point, right? This is the high before looking to buy, right? If you're looking to buy here, halfway back from high, so you take simply the high minus your entry divided by 2, split that in half. 50% of the way back would be here. Let's go back to the Canadian dollar and eyeball that real quick, right? Again, this high is right in here. You either take this high or this high. Entry point like right in here, halfway, roughly, right in there, right? That's your first objective, halfway back, right? Again, you wouldn't be looking to buy it here unless you thought the market was going to bounce. So over the last 26 years of trading, what I have found to be one of the most reliable and most dynamic profit target is literally just a halfway back scenario on any type of pullback trade. Okay? Hope that makes sense. And if you haven't watched any of the videos that I've put out in the last week, I urge you to do so. Those videos are going to be taken down. And then I got a fourth video that's going to be available today at noon Eastern Standard Time. All right? If you don't get emailed that video, be sure to let us know, and we will get that right to you. We got PDF files for those videos as well. Hope you enjoy them. Hope you enjoy the video I just put together, and have a profitable day. I'll be back with you tomorrow. Bye for now.